Good morning, everybody. Welcome to the live stream. As always, looking forward to getting started and having a good discussion about what's going on. It's been a turbulent week, obviously, um, and that's just talking about well, really, the last 10 days have been pretty interesting. And so there's been a lot of activity in the market, and we have a lot to certainly have a lot to talk about. There's no positions that I have currently open that are set for expiry this week. Although we do have some coming up in the next week or so. So we do have some things to look at. Also, if you noticed this week, I passed on a trade alert for Tuesday just because of all of the volatility in the market. It's not that there aren't some good opportunities. In fact, I am finding as a result of all of this volatility that a lot of valuations are becoming a lot more attractive right now. And that's something that is really interesting. Um, but even so, right now, I think that it made sense to kind of pull back and be willing to wait for a week. And so we'll get back into seeing those highlights hopefully in the week ahead. Um, but the idea here is really just about being willing to be patient and take trades under the right circumstances and that fit into exactly what we're looking for. It's okay to be a little bit more cautious, um, a little bit more deliberate when the situation calls for it. Just by way of a reminder, there are a couple of different ways that you can interact with me. First of all, during the live stream, want to encourage you to go ahead and use the chat feature so that I can see your messages as well as answer any questions that you may have, incorporate some of your perspective into some of the things that we're talking about. Also, during the week, there's a few different ways that you can interact with me. One is by sending me an email. I dropped my email address in the chat area already, rebelincomesystem@gmail.com. Um, that may be the easiest way, but it does take me a little bit longer to respond to emails. The most direct way to get in touch with me is a couple of different ways. If you are on Discord, you can use the open discussion forum to send me a message. Now, the messages that come here can be seen by everybody that is on the Discord server. So I've designed this as an area where we can share thoughts and comments and commentary as a community. Um, but I do pay attention to that throughout the course of the day, and will generally try to respond to those messages as quickly as possible. You can also message me directly on Discord just by going to the direct messages feature. You select the server the server or person that you want to interact with, and send them a message. Here's Traders Pro, which is my friend Jesse, and you can see here we do text from time to time just through Discord. So a few different ways you can do this, and whatever your preference is. If you are on Substack, you can also message me there. Or yes, let me go here to right here, the chat feature, and you should see me in your list of available chats, and you can message me there as well. So these are both areas that I try to pay as much attention to as possible and be responsive to as messages come in. Okay. All right. Enough about that. Let's talk about the markets. It's been turbulent, certainly. Here's the S&P 500. I was zooming way in recently just to try to get a feel for the way things have been going. And just interesting that last Friday, let me pull up my drawing tool. Always seems to be the last thing that I bring up for these. There we go. 1, 2, 3, 4, 5. So this was last Friday, kind of the low point. And we've been seeing the market has been going up, even though the last couple of days we've seen a little bit of a taper back as people, most of the rally was, let's face it, really confined to one day right here. And beyond that, what we've been seeing is a little bit of a taper, as just in the last couple of days, as people are taking profits from that big major day. I saw some commentary and speculation that called that really big rally on Wednesday, when Trump announced a pause on the reciprocal tariffs for many countries, called that a relief rally or a dead cat bounce. In other words, all apologies to those of you who may not like the term dead cat bounce. It's a technical term that's the market has been using for decades, so you'll bear with me. The implication here is that when you see the market rebounding really strongly from a big slide down, that's what we've been. This is actually pushing the markets very near to bear market territory. The Nasdaq actually did drop into bear market territory briefly, and so what they're saying is that this initial rally is kind of like what happens if you were to drop a dead cat off of the roof of a building. It doesn't bounce. In other words, this is eventually doomed to fail. Now, that's an assumption. That's certainly not a given. Rather than necessarily looking for any kind of a rally back up, to be honest, I would just like to see some consolidation in the market. I'm not saying that that's what's going to happen. I don't know. No, none of us really do know what's going to happen. I would just like to see the market start to consolidate a little bit as it tries to look for a little bit of certainty and clarity, not just from the political arena, but from some of the other economic data that is out there. We know that tariffs are going to be a thing. They are a thing in many cases right now, and we still don't have a lot of visibility about what those really mean or how they're translating to corporate results. And so without that information, it's hard to try to make and really draw any conclusions about what's going on or what is going to happen. That said, as I mentioned, the volatility of the past few weeks has pushed a lot of stocks down into some very serious bargain territory, and that is increasing the number of targets of opportunity that we have to work with. That's really nice, but it also means that you have to be willing to put a pretty critical eye on the things that you're looking at. Do I just jump on a stock because all of a sudden it has a really good bargain price? There's a lot more to it than that. If you've been attending this live stream at all, and for any length of time, you know that that's not just the only thing that I'm looking for. I pay a lot of attention to the fundamental strength of the company, and so a really nice discount is a great starting point. But it also means that I have to try to see what the company's overall business looks like, and to see if that is strong enough to suggest that the stock is seriously undervalued. A really good example is the stock that I highlighted for this morning's Rebel Income daily post, and that was on Pfizer. This is a company that I have followed for some time, to be transparent. I have a position in this stock at a much higher price, by the way. This has been following in a very long downward trend. But the stock's value price right now, just to give you an idea of what this chart looks like, it's pretty horrid. This is a week. Each candlestick here is a weekly view right now, and so this gives us a good way to go back and look over several years. If you want to talk about ugly looking stocks, Here's the peak in 2022 at about $60. Now, I don't know. I didn't buy it at that point. I didn't buy it at the top. I did buy it at around 50 though. We've seen the stock slide all the way down below that price. And obviously, the market's momentum the last few days has pushed it even lower. With it, it's actually now down at levels that it has not seen since 2013. That's wow. And if it continues to fall, we're going to start looking for price comparisons back in 2011 and 2010. So we're at some historically very, very low levels for this stock. And the interesting thing about it is that a lot of the fundamentals of the company are actually looking pretty solid. And so a lot of what we're seeing here is being driven by market news more than anything else. I also saw there was a little bit of a piece of the Robert Kennedy was specifically called out Pfizer questioning the efficacy of their COVID vaccines during the worst of the pandemic. I'm not going to speculate about that, but that's also increased the amount of selling pressure on the stock as well. The ironic thing about that particular piece of news is that while they're still selling COVID vaccines, it's become a very minor portion of their overall business, and they're really focusing on the core pieces of their drug pipeline, especially oncology, which look really, really interesting. And so the value proposition is really, really nice, but the price pattern is really, really ugly right now. And so, do you take the discount at face value? That's the Benjamin Graham approach. It says that if the stock is a good bargain, if the stock's price is cheap relative to what the value of the business is, the price action is less important. Well, yes and no, because the price action is something that we have to pay attention to and be willing to watch on a regular basis. And sometimes when you see something like this, that creates an emotional reaction that we have to try to be able to deal with. And so you can't completely discount in my mind that fact and that reality. Excuse me just a second. I apologize. I need to take a drink. No product placement here. That was not an endorsement in any way, shape, or form. Ha ha ha. Okay. Well, let's go ahead and move on, and let's talk about some of the currently open positions that we are paying attention to. Should have some time as well to take a look at some of the stocks that you're interested in, and so I'll be interested in seeing what comments and thoughts you have about those. Let's go ahead and start. As I mentioned, pretty much everything that is on deck right now is all set for expiry next week. That's interesting, and means there'll be a lot of activity next Thursday. This is actually next Friday is a holiday, and so this is a Thursday expiration, and which is kind of rare, but that's okay. So we'll just kind of start, and we'll go down the list of all four of these, and then expand our discussion from there. Halliburton, this is a stock that I was assigned beginning of March at $26, and was then able to turn around and sell a covered call at the same price. Now, at the time, that seemed like maybe it wasn't the greatest thing, because the stock was starting to build some nice momentum, and I was selling exactly the same price that I bought the stock at. I'm not afraid of doing that from time to time if the opportunity looks attractive enough. And This was a little bit more than a 1 month trade, which is also a little bit out of the norm, but brought in 2.69% in premium on this one. And let's take a look at the stock now. HAL, Halliburton. There we go. And it's down here at 20.5 now. So I'm in on this stock. My purchase price was up here, clearly before the worst of tariff fears and momentum came to play. So what does that mean for the stock's current status? It's going to be hard to try to find a catalyst to propel it very, very quickly back up into above the $26 price. We've got the 20-day moving average that is clearly moving down, and that is acting as resistance now. Got a big distance between where the stock was at as recently as the start of this month versus now. Here's about 25, and now we're down at about 21. So that's about a 20% difference, and that's a significant amount of price difference. We do have earnings coming up, and that could provide a little bit of a bullish scenario, especially if management can provide some good clarity about how it expects current policy, whether we're talking about interest rates or tariffs, to impact the company and what they're going to do to deal with it. That's presenting, in all honesty, kind of a hopeful scenario. That doesn't mean the stock is going to rally quickly. It's in my mind more likely to try to find some consolidation and stabilization around this latest range, 22 to what is this, about 19 maybe. If it can start to do that, that should actually be pretty encouraging, and to suggest that it could find find a way to start to pick up some new bullish momentum. But kind of like Pfizer, this is another stock that's really been in the midst of a long-term downtrend going all the way back to March of last year. So this is about 1 year, and if we extend it back even further, October of 2020 and 43. So this is about a year and a half of mostly downward momentum for the stock. It's created a great value proposition, and honestly, it's better at 29 than it was at 26, but it's still very, very high. This is one of the things that is kind of one of the challenges that you have to be willing to confront as a put seller, as an income generator, is that when you're selling put options, you have to understand that sometimes you're going to be assigned, and sometimes that means that you're going to be holding stocks through some kind of gruesome downward trends from time to time. The analysis comes back to fundamental strength. If the fundamental strength in the business is still there, eventually the value proposition is going to be recognized by the market, and that's going to reverse back again. So you just have to be willing to be patient, decide whether you want to play that game or if you want to take a different approach. Some of the people in our group who are a little bit more active about the trades that they place will buy back very quickly if the stock drops below their assignment price. They'll try to avoid assignment. That's not what my method is, but the advantage of doing that is that it limits loss. And especially if you're using my income generating approach as a way to work with swings within these work with swings against these downward trends, then sometimes it makes sense, especially if you don't want to take assignments. You need to be nimble about closing out these trades, limiting loss, and moving on. In my case, I use put selling as a gateway to owning stocks that I really like. Pfizer fits that description. Despite the decline in price, I've also been enjoying a very Pfizer. Halliburton fits this fits this case. I still got Pfizer on the brain a little bit. This is a stock that pays about a 60-cent dividend, about 68 cents, excuse me, per year right now, and that's actually a pretty nice dividend at the current price, a little over 3%. I'm okay with that. That's one of the reasons I don't mind sitting in and holding these stocks for an extended period of time is I'm focusing on dividend paying stocks. And so even as I'm holding on to them, they're generating income for me, and that's useful. But right now, it certainly looks like Halliburton is not going to be closing out for me. It looks like I'm going to be assigned, or excuse me, looks like I'm going to continue to hold the stock. All right. We also have let's see, put sale on FCX. This is a company in the mining sector, kind of along with Barrick Gold. FCX works with some other minerals as well. But I sold the $40 strike. This was in the last week of March. Brought in a little over 2% for about a 3-week trade, which was quite nice. And like the rest of the market, it's taken a little bit on the chin. The market's momentum here, this was beginning of April. It looked like it was in pretty good spot, and very quickly pushed all the way down to a low around 28. And now we're seeing the price sitting at its current level of around 33. Could it get all the way back to 40 in the next 7 days? Sure. Seems a little bit far-fetched though. So it looks like I'm going to be taking an assignment here. We do have an earnings announcement coming up on the 24th, which is a week after this option expires. So we'll see how this works out. Dividend distribution coming up on the 15th. I will not get this unless I am assigned prior to the 15th. But despite the drop, I haven't been yet. So we'll see. But it looks like it's unlikely that I will that I'll own the stock before the 17th. But I expect to take that assignment and then be patient and wait and see what happens. And yeah, here's my purchase price is around 40, so that means I got to wait for a little while. Join the list. There's an increasing number of stocks that fit this description, and so do you just simply take the punch to the gut and deal with it? Yes and no. Part of that, the answer to that question, relies on pull out the drum. I'm going to hit the position sizing beat again, because if you are if you're taking very large position sizes or larger position sizes than you should, your ability to absorb the occasional increase in of assignments from put sales really starts to restrict your buying power. And so you may not have the ability to really be very flexible if you're being too aggressive about the sizes that you're using. I'm actively trying to limit my exposure for any one trade right now to 1 to 2%, and maybe 2.5% to 3% on the outside. But really, with market volatility picking up right now, it's smarter to be more conservative than more aggressive. And so, if you are limiting those position sizes, it doesn't mean that there is less of a reaction to these kinds of drops, but it does mean that your ability to think about them is going to be a little bit more clear. You're not going to be freaking out as much as you might otherwise. It's going to be a little bit easier to keep things in a constructive context. I hope all of this is making sense. If you have some other ideas or other suggestions about what's going on with some of these stocks, feel free to speak up. I'm very interested in knowing how you feel about what's happening, and if you're responding in a different way than I am. Right now I'm just giving you my perspective. So please feel free to offer yours. Freeport McMoran. All right. Also, there's a covered call on Skyworks Solutions. This is a stock I was assigned on the 21st of March at 67.50. Sold the $70 strike. Tech stocks have really kind of taken the brunt of a lot of the volatility lately, especially since the biggest target for tariffs now is China. Um, that's really starting to look more and more like a situation of uh, two fast moving trains coming at each other in the same direction, playing a game of chicken. Who's going to blink first? This morning, I saw a news report that China is announcing its own 125% tariffs against the U.S. in retaliation of what Trump did, and clearly the two countries think that they are their own big sticks. To some extent, that may be true, but it's going to be a question of who's going to back off first. And if they don't, we'll see what that impact is. But that is putting and keeping a lot of pressure on tech stocks because so many of them are dependent on production capacity as well as sales coming out of China and that region of the world. It's easy for this to sound political, even though I'm trying not to, just because that is kind of what is that's the predominant theme that is driving the markets right now. So if that is the case, I apologize. This is the neighborhood where I bought where I was selling the stock, the put sale, the $67 strike, 67.50 that I sold is in somewhere in this neighborhood, and clearly the stock has dropped way below that. So, all things being equal, just like with Halliburton, um, along with a lot of other things here right now, and FCX looks like I'm going to be holding on to the stock and going to be giving this a little bit more time. Again, all of these are conservative position sizes, so I do have the ability to take these assignments and give them a little bit of time. These are companies that I am willing to hold on to for those extended periods of time because I think the value proposition is that attractive. Um, but that also means that right now you have to be patient. This is one of the themes that I've kind of circled back to in the last week as I've been watching this is not only the idea that my targets of opportunity are increasing, but falling back on some logic that it gets quoted a lot in market media because it comes from Warren Buffett. But it's the idea that when everybody else is fearful, that's an opportunity to buy. This is another reason to keep your position sizes conservative because if these kinds of conditions do create better buying conditions for bargain hunters, you have to have the dry powder available to make those acquisitions. Uh, doesn't mean you take every single opportunity that you see, but as you apply the analysis, as I go through the process of evaluating the companies that I'm highlighting for Rebel Income, hopefully you're going through your own evaluation and making a decision about whether that's an opportunity you would like to take advantage of or not. Some of you may be in Skyworks just as I am. Some of you may not be. I don't know. Maybe you decided that tech was just way too volatile right now for your preference. I understand that. Good heavens. Here's China. Here was their last earnings report. Stock dropped from about $84 all the way down to 64 almost overnight. Literally overnight, excuse me, not almost. That's serious. All right. Again, any other numbers you want to share by comparison? I'm certainly interested in seeing. And if all you want to do is, if you have some horror stories that you're ready to share, to commiserate, that's okay too. We can always do those as well, because there's a lot of that going around right now. Let's face it. Uh, the current market does make it difficult to be a buyer in the market and to even look at big value for what it could be as an opportunity. And if you're the kind of person that is, if current market conditions are so uncertain that they make you really uncomfortable, maybe their preference is to sit on your hands and wait, put your money under a mattress for the time being, as it were, figuratively or literally. I don't know. That's okay too. The great thing about the market is it's always going to be around. When you decide you're ready for it, it'll be ready for you. So if you don't like what's going on right now and you want to just kind of take a holiday from the market, give yourself a mental health break or whatever, you can do that, and the market will still be waiting for you when you decide you're ready again. That's part of what I did this week by taking a break from placing a trade. Um, I also don't stop paying attention to the market just because I don't want to miss opportunities to keep my money working for me. But it does mean that I have to deal with an increasing number of assignments from time to time. Okay, here is the last position that I have on deck right now is on GIS. I placed this on the 2nd of April when the president announced all of the tariffs. Ironically, selling the $60 strike. There's a lot. Give, this is a good time to study. There you go. And that's okay, right? Especially if you have a lot of different resources that you're trying to make sense of and trying to think about how you might be able to refine some of the things you're doing. I agree with that totally. I may not take a total holiday, but it's good. You talk about sharpening the saw, I think is the popular term in corporate parlance. It's an opportunity to refine your skills, increase your knowledge, for sure. Okay, so with General Mills, I sold the $60 strike because of the increasing volatility in the market. This option was very inflated, so I was able to get $1.91 for only 2 weeks of time. So let's check in. GIS. All right, selling the 60. I don't know why it switched to a narrow. That's interesting. Sold the 60. And now the stock is at around 57.55 at this current level right now. So still a little bit of distance between the two levels, but not as far as what we've seen with some of the other stocks that I've been following and that I'm placing trades in. Certainly there's time here in the next week. So I can afford to give this time to play out. And again, if I am assigned, that's perfectly all right. Excuse me. I am willing to own this stock at 60, and that would actually be a positive thing. Now, it went ex-dividend yesterday, so I'm not going to get this dividend. Okay, I can wait for the next one. let's just check in here on current prices here. If you are also in on this trade and you're thinking, there's a week left, it's not likely to recover, maybe I don't want to take the assignment. Again, you certainly don't have to be placing trades the same way that I do. Bringing in $1.91 on this one. This is kind of an interesting picture. It just shifted a little bit. But on the $60 strike for six days out from expiration, I'd have to pay $3 right now in order to buy this back. So I'd take a loss of about $1.10. I only sold one contract, so that'd mean $110. I don't love that, but again, if part of your objective right now is starting to shift, maybe rather than taking assignments, your preference would be to try to limit the loss so that you can move on. Keep what cash you have. Now it's gone down to 280, so be able to hang on to a little bit less than that. Maybe put in a buy to close limit order at 280, 275. It just shifted again, and you can improve the net loss a little bit if you're trying to avoid taking an assignment. Not a recommendation to buy or sell, obviously, but just kind of outlining some of the different choices that you have. This would be a way to keep some powder dry right now. If you really don't like what's going on in the market, then cutting losses. That's a thing. And it's not even a bad thing. Just because I'm willing to take these assignments and ride through them does not mean that you have to be. If you're really uncomfortable right now, I like what one of our friends in the group, Carl, likes to call the sleep test. I've used that term on a few occasions as well. If it's something that is just making you uncomfortable, it's keeping you up at night, it's probably better to just go ahead and limit the loss, close it out, and move on. You'll sleep better at night, and it'll be easier to try to manage what you're doing. So those are all very, very valid points. It's not a right way or a wrong way to think about how you want to deal with risk. And I'm using risk, the word risk, I guess, kind of in concert with the market right now. And that is because I do think that there is still some continued risk ahead. Pause or no. Let's not fool ourselves and think that tariffs couldn't be back on a lot of these stocks, on a lot of these countries in the very, very near future. Mr. Trump is Mr. Trump, and we've seen how mercurial he can be, and certainly he is acting on his own judgment, nobody else's. Agree with the logic or don't agree with it. The truth is it's moving markets right now. So if that's something that makes you uncomfortable, then it may make more sense to try to pull back, increase the amount of cash that you have in the market, and wait for some things to settle down. This is definitely not a risk-on scenario right now. This is a time to try to be more cautious, more deliberate, more thoughtful, which Gibb emphasized by saying it's a good time to study. This is a good time to think very, very critically and very carefully about the investments that you're making and your approaches to them. Okay. Much more of what I would be talking about right now in the time that we've got left would be about soapboxing, and I don't want to do that. So I'm going to open up. I'm going to open up the floor for you. If there are some stocks that you're interested in taking a look at, please drop them in the chat. More than happy to go over them and see how things are going. We can go through some analysis if you would like. But the floor is yours. Okay. We also don't have to. If everything that needs to be said has been said, then that's okay too. We can go ahead and close this out a little bit early, and I can give you back some time in the morning. I do appreciate those of you who are here and for being here and paying attention. Good question. Does anybody use OneNote to track trades? I have not, so I'm not familiar with that tool. That would be a great question to put in the open discussion area of the forum of Discord right here. Be interesting to see if there is anybody in the group that is using that tool to track your trades. If you find it to be useful, if it gives you an easy way to reference the profit and loss and current circumstances for the positions that you're paying attention to, Gib, then I'm 100% in favor of it. It's whatever system makes the most sense to you. Call me boring, call me old, or just old school. I don't know. I keep a spreadsheet. If I didn't have a spreadsheet, it would probably be a ledger. I'd be doing it all by hand. But this spreadsheet is effective for me. All right. Hope this has been helpful, everybody. I do appreciate the time, as always. The talking about the markets is always interesting to me, and being able to participate with this group in keeping track of what we're doing and answering your questions, having the opportunity to interact with you. This is one of the reasons I love doing this live stream. I hope you have a wonderful weekend. Don't worry too much about what may or may not be happening in the political arena in Washington, D.C. Hope you enjoy some good quality time with people that you care about. If you have any questions between now and next week, as always, reach out to me, send me an email, contact me on Discord or on Substack. Try to respond just as soon as I can. Otherwise, we'll talk again next Friday. Thanks, everybody. Have a good one.